Hi guys, this is MJ Peeps, guys. I know you have been waiting for this video, guys. This is a weekly analysis on gold. In case maybe you are new on this channel, this is we are gold trader, guys. We basically trade gold. So maybe if you need any information, especially on gold, guys, this is what we do. This is what we do. So let me get rid of this because I've been working recently on my chart. Let me get rid of this so I'll start fresh analysis. Okay, I'm on gold, guys. This is daily time frame. Based on, so now we are running a basic analysis on what gold has been doing and what we are going to expect on gold, especially this week, guys. And so on our daily time frame, what we have been seeing concerning market structure is that gold has been going bullish, but we experience a little shift of market structure bearish. This is the point here. We experience a little shift. So for you to see it clearly, let's go to our 4 hours time frame. If you see from our 4 hours time frame, in fact, we have the shift of market structure started from this guy here, this particular low here, this point here. So we saw a shift of market structure because gold has been respecting the ideal structural expectation of a bullish movement. Higher high, you see it, higher high, higher low, higher high, higher low. Let me change my cursor. You see my pointer, higher high, higher low, higher high, higher low. We saw higher high, higher low. We saw higher high, but gold refused to print higher low. What it did was that it printed a lower low. So now this is where the shift of market structure started. You see from this point here. So after the shift, what we saw gold did was that it printed a fair value gap. This guy here, we saw a fair value gap. This gap here, we saw an imbalance. We saw imbalance. See it here, gold printed an imbalance here, and we saw that price came and respected that particular zone. It traded through that zone, even picked some part of the other block that was there. So price respected, the price came down and retested that particular zone. You see, it retested that other that fair value gap. So it came again and printed another fair value gap or breakaway gap. You see it, another this breakaway gap. It printed this new breakaway gap. You see it printed, price printed this breakaway gap. So that was what compared the bearish momentum. So but let me show you a little stuff that I've been working on. This has been assisting, especially in filtering out our weekly bias, guys. Now it's called the COT index. Is a index that is being used based on sentimental analysis to tabulate all the expectation of traders. The position of traders, that is mostly is being divided into 3 groups: the commercial traders, non-commercial, and the non-reportable traders also. But now this particular data is for the non-commercial guys. Based on what we have been seeing on the non-commercial, we saw that the non-commercial that have been going on long here, they were one of the major people that have been compelling price to move. So but we saw from on 4th, or let me say from 11 February, we saw that they have been good. There was a little shift. They started taking profit. We saw it from 356,500, it went to 343,766, 334 points this to 30. So now this was one of the basic factor that was that compelled gold to go bearish, because they were taking profit. And we saw that at the point where they were taking profit, they were reducing their long position. We saw that the ones on short, they started adding position. You see it from 3 this, they added to 5 this, they added to this, they added to this. Now they have been, if we check the net position, we see that there was a little change in the net position. You see it now, there was a little change because the net position then was 302, it reduced to 284, it reduced to 260, and reduced to 261. This. So we saw that one of the basic factors that has been pushing price bearish was the fact that the ones on buy started taking profit, and the ones on sell started adding position, adding position, guys. So let's go to our chart. Let's see what gold has been doing. Now we saw that since from then, that was one of the basic factors that has pushed gold down. It has pushed gold down. Now let's check and see where gold has traded to. We saw that gold has traded to this particular support zone. See, this came and retested this zone, swipe this support zone. It formed this rejection block here, or rejection count where it formed this. After this, we saw a gap. A gap was from this, a live chart, guys. This is a live chart. So we saw this gap. Now, so what we are going to do here is very simple, guys. We are going to take our Fibonacci tools and block our Fibonacci tools from one swing to another, so that we will get our zones. We get our premium zone and our equilibrium and our discount zone. Now we saw that 50% of this Fibonacci is called is very simple. The 50% of this Fibonacci is called an equilibrium. So from our 50% upward is called a premium array, and from this 50% downward is called a discount array. So now once we are buying, we are expecting zones within our, once we are selling, we are expecting zones within our premium array. This upside is our premium array, and once we are buying, we are expecting zones around to buy around this discount array, guys. It's very simple. So now since we have plotted our Fibonacci, sorry, let me change the line. Our Fibonacci, let me make it a straight line. So this is our equilibrium. So now from our premium array, since we are expecting a sell in our, especially now based on our market structure, we have already seen that we are on bearish, guys. Our COT is showing us also that we are going 60% bearish and 40% consolidation. So now this is what we are expecting for the week, guys. So now it's very simple. What we are going to do is that since we have plotted our Fibonacci zone, now we are going to check some of the basic zone. Now we are using ICT concept, guys. We are going to check what some of the basic zones that are within our premium array. So now I'm seeing a mitigation block and M block here. This is our M block. Then I'm seeing that price is even respecting. This is our M block. I'm seeing our M block here. This is our M block. So I'm seeing our M block here. So our M block is here. Come on, let me adjust this. It should show you. Change the color. So I'm seeing our M block here, and I'm also seeing our fair value gap here. So now these are the two zones I'm expecting to hold price. I'm seeing this, and I'm seeing also a trend line around this zone. You know, if you have been consistent with us, you know that gold so much respect, especially for our strength line. Especially for our strength line, gold mostly respect for our strength line. So this is where our trend line, I'm seeing our trend line here. Let me adjust the trend line. I'm seeing our trend line here also. So now, so from this zone and this zone here, we are seeing the street confluence here. We are seeing an M block, here, a trend line, and a Fibonacci zone here. Then here we are seeing a few. Now these are the two zones that we have seen price printed. Then also we are seeing these old highs. You know, old highs, also called our resistance, is one of the institutional let me change the color of this also. Change the color of this. So old high also is one of our institutional reference points. old high, also called resistance zone. So now we have seen an old high here, especially a rejection block here formed here, this zone. So if we like, we can take the block here, but I'm not taking the block. I'm taking the rejection site, this zone here. I'm taking it here. Okay, now so now these are the three confluence that we are watching, guys. So now based on this, I'm expecting this first zone to hold price. These confluences of three parameters, I'm expecting them to hold price here. This is where I'm expecting to hold price, because our COT is going on sell. We have trend line is going on sell, and we have our mitigation block also, and our Fibonacci and our trend line, they are also going on sell, guys. So now this is what I'm expecting. The first zones I'm expecting to hold price, but if zone cannot hold price, I'm expecting this fair value gap to hold price in a sell zone, in a sell bias. So where am I expecting our sell to reach? I'm expecting our sell to reach this particular guy here, over here, this guy over here. I'm expecting our sell to reach this guy, this entry drill type 2. I'm expecting it. I'm expecting price to reach this entry drill type 2 here, our 2 Fibonacci 2 fair value gap, especially I'm seeing a rejection block there. So I'm expecting a clear of this guy. I'm expecting a clear of this to be clear, especially if we see a momentum in the fundamental factors or fundamental news. Once we see them pointing bearish, guys, I'm expecting this zone to be taken, this particular zone to be taken. So now this is what I'm expecting on gold, guys. This week I'm expecting on gold. I'm expecting this zone to be tested and to be traded down. This should pull the momentum downward. If this cannot hold price, I'm expecting this zone, because I prefer taking our trade within the premium area. Since we are going on sell zone, we are going on sell zone, guys. This is what I'm expecting from gold. This is what I'm going. Remember, our COT is seeing 60% sell, 40% consolidation, and our price action. Some of our zones here, trend line here, our trend line is still pointing bearish, and our mitigation block is still bearish, and our Fibonacci, we saw it, is still holding price and still holding price, guys. And our market structure, we saw that in our 4 hours time frame, is still going bearish, guys. So now let's check our 1 hour and see what has been doing. Even though we saw a little shift of market structure around this guy here, we saw a shift of market structure in this guy here. We saw a shift of market structure at this point here. Price violated our structure, bearish structure, but in 1 hour time frame. So that's why we are expecting this violation. We are expecting also, if possible, let me go to the 15-minute time frame. Let me show you something. You see here, we are seeing rejection candle, but based on time and price, this is not time to trade. But so based on that, I'm expecting, if possible, still price should even come and test this zone. This zone, price should test in, clear this if possible, before price should come and engineer the main zone that I'm expecting, guys. This is the zone that I'm expecting. Once I see price around this zone, I'm expecting boom here. I'm expecting boom here. So now this is what I'm watching on gold. 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 I'm watching this move on gold. So I'm expecting here. This is what I'm watching on gold, guys. It's very simple. This is what I'm watching on gold. I'm expecting this first zone to hold price, or this zone to hold price. If this cannot hold price, our last zone that we're expecting to hold price is here. Then our main move will start. But now for now, this is the main zone, because still this zone is within our premium area. So I'm expecting this zone to hold price. This is the zone that I'm expecting to hold price here. So guys, we need to wait and be patient. Trading is all about patience, guys. Let's be patient and see what price will do, especially today being Monday, London section. Let's see what price will do London session before we jump into this trade, guys. Let's watch and see what price will. So if you are still new on this channel, we have a Telegram community where we send signals and we send some vital information. Maybe if you have not yet joined our Telegram community, gold trading community. Guys, the link will be over here, so you will just do good to like join the community. And also, if you are still new on this channel, guys, it's very simple. Smash on the subscribe button, and also smash also on the alarm button, so that once there are new videos, you're one of the first person that will be notified, guys. So stay with us, stay with us. This is MJ Pips, guys. Stay with us. So we are expecting, remember, we are expecting bearish movement this week. Our COT is saying bearish, 60% bearish, 40% consolidation, and some of the busy factors are zones here. They are still on bearish zone, guys. So we are expecting bearish, guy. Stay with us. This is MJ Pips.